Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today I'm pleased that we have Mike Tosaw with us. Mike is a registered rep from Know Your Options, and Mike has spent a lot of time in education with thousands of people, educating them in all the different option strategies. But today he'll be talking about the Iron Condor, the advantages, the disadvantages, why you'd put the trade on, why you may not want to put the trade on. Mike will go through the balanced view, if you will, because I know Mike is just an amazing educator, and he really understands his options, and hence the name Know Your Options is just really appropriate for Mike Tosaw. So, Mike, thanks for joining us here at the IC. Really appreciate it.
Thank you, Steve. And what we're going to do right now, do I have the, okay, I see I have the ball. Okay, the FX Condor flies again. First off, I'm excited to be here. It's always a pleasure to do webinars on the ISE site. Steve and I have worked together for many years now, actually, doing webinars on the ISE site. We've traveled the country together, and it's always a pleasure to work with the ISE. Before we go any further, we do need to mention that options do involve risk. We strongly recommend that you read the characteristics and risks of standardized options. It's available by calling the phone number on the screen, and it's also available by visiting the web page on the screen. If you're interested in this document, feel free to contact us through Brokers Express or at knowYourOptionsInc.com. We'll show the website at the end. Or I know it's available on the ISE site. It's available at the bottom of their website. Let's start by talking about FX options. Question that a lot of people have when they are looking at trading foreign currencies. Well, should I trade the Forex? Should I trade futures on the currencies? Should I trade options? How does that work? Well, what we're going to talk about today is the product that the ISE offers. This is available through your option brokerage firm. And we have a branch through Brokers Express. I'm a registered rep. You can trade this through us. You can trade this in an Options Express account. And people tell me that there are other brokers out there, but I'm sure there's. No, I'm just kidding on that one. And you can trade it through. You can trade it through any account that you have option clearance to trade on, typically. So with that, this is an exchange-listed security. And what I like about this is the fact that you have an intermediary, so to speak. So let's say that you're looking to make sure that you get a good fill, or you want to make sure that you have some type of regulator involved with this. This product is fully regulated by the ISE. So the same place that you would get the fill on Google, you would also get it on an FX option. This is a cash-settled product. It's settled in U.S. dollars. So when we're going through this today, understand that this is all dollar-based. So if you're just as an example, if you're bullish on the dollar versus the euro, then you would buy a call option on EUI. And if you are bearish on the dollar versus the euro, you think the dollar is going to go down against the euro, you would buy a put on EUI. Now, of course, that doesn't necessarily tell the whole story. There's many other factors in option pricing, volatility, all sorts of other things that are involved with this. But the point is this: everything is dollar-based in terms of how the underlying actually exists. This is European style in that you don't have to worry about getting assigned early. The strategy that we're going to talk about today, the Iron Condor, if you're doing an Iron Condor on a stock, you may have risk of early assignment. Now, in reality, it's probably not that big of an issue, just because if you get assigned early, it's not necessarily a bad thing. You just need to, it can be scary if all of a sudden you see hundreds of thousands of dollars in parentheses in your account, because I've had that in my account before in one of my first ever option trades. But once I actually called my broker and understood what actually was the actual risk and that type of thing, it wasn't that big of a deal. But with this, you don't have to worry about that headache, so to speak. European-style options are not able to be exercised until expiration Friday. Now, the other thing that's neat about the FX option product, you can trade these as spreads. So one of the objections, let's say that you're looking to trade either the spot forex or futures on the currencies, but you're concerned with the unlimited risk that's involved with that. Well, then maybe you look to trade options on it, and then you're thinking, oh, I don't want to pay that premium if you're looking to buy a call or buy a put. Well, you have the ability to trade these as spreads. So just like you could buy the 55-60 call spread on XYZ stock, you can buy the 70-72 call spread on EUI. Whatever you want to do, every option strategy that you can do on a stock, you can do on the FX options, with the exception of the covered call, because you're really not able to buy the underlying. Now, you can work around it by doing a cash-secured put, and there's ways of doing it. But I would say, and I don't have any statistics to back this up, I would say that in my own personal explanation of working with these options, since pretty much the inception, when Steve and I have started talking about these, you can do, I would say, probably about 90% of the strategies with these as you could with a stock option. The only difference is that there's no underlying to buy with these, and maybe it's not really 10%, maybe it's 95% that you can do. I don't know. The bottom line is you're just not able to buy the underlying. Now let's start by asking ourselves a few questions. I want to be clear with everybody right away. Where is the market going? Folks, if I knew for sure where the market was going right now, I would not be here right now. I would be out on a boat fishing. I would be out hunting. I would be playing golf. I would be doing something along those lines. I'm typically not a market directional trader personally. I'm more of a neutral trader when it comes to options. I'm a long-term bull, but when it comes to short-term trading, I'm more of a neutral trader, and that's pretty close to what our stance is at the Know Your Options firm for the most part. And there's exceptions to it, but for the most part, that's how we are personally. So with this, in terms of saying the market's going to do this tomorrow, do this trade, and you'll get rich quick, you can maybe do that. I don't know, but in reality, with our advice, don't plan on ever hearing anything like that from us. So I want to make that perfectly clear before we do anything. Is the recession over? That's a question that's coming up quite a bit. In that, have we hit bottom? One thing that Steve and I were talking about before the webinar came on was that a lot of companies right now are forecasting just awful numbers, and they're beating them. And when they're beating them, the stocks have gone up. That's becoming fairly common right now in today's marketplace. Now, I think it's ironic because this seems to be the opposite of what was going on during the tech bubble about 8-9 years ago. So right now, it's good to be bad, because then if you're not quite as bad as you say you are, then the market goes up. Now, that's just one of my observations that I'm kind of seeing in the marketplace these days. So is the recession over? Well, you can be the judge of that. But the fear that was out there last fall, there's definitely much less fear now than that was out there last fall. What reason does the market have to increase? Well, some people say, well, the market's not going to go any lower. And when I say the market, I'm making reference to the stock market right now, just so we can have some clarity. And other reasons are that numbers are getting better right now. Companies are beating expectations, and maybe that, when you set expectations so low, it makes it easier to beat. I don't know. But the bottom line is this: the stock market's ahead for the year. With everything that's going on, the stock market is definitely ahead. Can it go any lower right now? Good gosh, yes, it can definitely go lower. Anything can happen in the marketplace. One thing that I've said throughout my entire career in this business: never fear the market, but always respect the market.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.